Convergence Partners recently raised a $150 million pool of capital for investment in ICT private equity. CNBC Africa spoke to CEO Brandon Doyle about the private equity fundraising environment in Southern Africa, as well as the general direction of current trends in the PE market. Take a look.
We've got some real experience, I guess. We've been out on the road for some time. We did start fundraising almost 3 years ago, and as you say, we late last year got to our first close target of $150 million. So we still actually are in the fundraising market at the moment, although we've got a fund that we can invest out of. So the first thing is that there was a bit of a liquidity dry up in the funding market for private equity generally in the post-2008, if you like, crisis period. And I think emerging markets suffered a sort of double blow of not just what was happening in the funding market generally, but also the funding market for emerging markets. So it has been tough, but there are signs of life. Things are improving. As I say, we were able to get our fund away ultimately, and some of my colleagues out there in the market are experiencing some improvement. So I think you're starting to see more monies flowing back into the market now from more varied sources.
Let's talk about those sources. Where's the money coming from at the moment, specifically when it comes to emerging markets and Southern Africa?
Yeah. So I still think there's pockets of funding that are supporting the market, and perhaps pockets that need to become more diverse in nature. So right now, in our fund, as an example, our backing came mainly from the global development finance institutions. Plus we ourselves put some money into our own fund as a catalyst to getting more money into the system. So I do think the funding market does need to broaden. We're starting to see some encouraging signs from here in South Africa, in particular around the pension funds, and there's obviously new regulations that are starting to come into play, which will both enable pension funds to get involved in the funding market for private equity and maybe act as a sort of more encouraging trend. And elsewhere across the continent, we're starting to see the emergence of sovereign wealth monies in Nigeria, in Angola, and alternative pools of capital starting to kind of coagulate. There's also quite a lot happening in the fund of funds world, where a lot of, I guess, what were formerly limited partners in the private equity space are getting more into a sort of fund of funds type model. So I think, as I say, there is a definite signs of an increase in the availability of the pools of capital from more diverse camps, and also from more diverse geographies. So we're starting to see interest from the likes of the Far East, particularly China and India, as well as the US. And the US has been interesting because I think when we started our fundraising process, typically the US investors and institutions we're talking to had a fairly negative perception of the African continent as a place to invest in. I think that's changed.
It's changing,
and not only has it changed in the sense that the negativity is starting to filter through, is that the questions they're starting to ask you during due diligence and your initial engagements and the like are just a lot more informed, a lot smarter. So it's quite clear that the US market is starting to gear itself up and getting more intelligence and getting more information about what actually happens on the ground.
What are the major focus areas for investors at the moment? Now you are in ICT, and that is one area of focus. What are the others, and how much does it help when a fund specifically has a clearly defined theme of investment?
Yeah, I think it does help. I mean, I think the fact that we had a proven track record in a particular sector and therefore able to demonstrate that we understand that sector deeply, the regulatory challenges that it faces, the kind of pan-African trends that are happening, so it definitely helps. And that was certainly our experience in terms of our engagement. There are other sectors where you're starting to see sector specialization. Agriculture is a good example, mining, infrastructure generally. Obviously when we're in ICT, we're actually a sub-themed ICT infrastructure fund, so we kind of straddle both of those worlds. And again, going back to the previous question, is that because there's been so much support from the DFIs obviously like to see their money going into activities that have a social development impact. So we're impact investors, and typically these themed funds, infrastructure, ICT, agriculture, are very much in keeping with the kind of social development imperatives of the main funding community supporting the private equity industry back home in Africa. So it's kind of a sort of a virtuous circle between funders and sector focused funds at this point in time. Of course, there's still space for generalists, and And we're seeing a lot of fundraising going on in the generalist market as well. We don't understand that market obviously as well as we do the ICT sector, although we do partner funds across the board. So, and that's also a common theme in Africa. Is there's a lot of sharing of deals and syndication of deals amongst different funds, partly from a risk mitigation point of view, because often you're venturing into new territories and it's useful to have experts that have done something there before or have been in a sector before. And I think a lot of the generalist funds see us as sector experts who can help them in terms of whatever deals they have within our sector. So as I say, there is this virtuous cycle between funders and investors and funds, and then as between the funds themselves.